Hey guys, this is Andrew for TRENDLINES.com. So for those who are watching my video for the first time, I've been working as a professional trader for the past 6 years in Hong Kong, and I'm using technical analysis every day to help me to take any trading decision. And in my videos, I want to show you guys how to do it yourself. So today, let's make a complete analysis of AMC, and I'm going to show you all the different techniques that you can use to predict the price action. Let's get into it. Alright guys, so we are on the AMC chart. As usual, we start on the 4 hours time frame. So I'm gonna go step by step. I'm gonna use all the different techniques and I'm gonna try to conclude what would happen soon. I'm also gonna go quickly through the option interest because I'm an option trader and I think this information is very valuable if you know how to read it. So first, let's start with technical analysis, moving averages. So when you want to use moving averages, you guys need to go from one time frame to the other one, and you need to focus on the recent past. So when you look at this price action, so this was the last 2 days of the week, you can see that we were ranging between, like, let's say 1050 and 9, all right, in this area. But each time we were actually supported by the 200 period moving average on the 4 hours time frame, which is the best time frame and the best moving average to use. I'm using simple moving average. You can use exponential moving averages. It works as well. The only thing is that you need to check if you have good reactions in the past. So only when I look at moving averages, we are bullish, and we can see that the 200 period one is holding the price quite well. Now I go on a daily. I do the same thing. I've done this with you guys before already. And you can see that you have no new information because you have the same reaction with the 50 period moving average on the daily time frame. So no new information here. I go back on the 4 hours time frame because it's the time frame where I think you can see things the best. Let's do some Elliott wave counting. All right. So Elliott wave counting, for those who don't know what it is, it's just about trying to break down the price action in waves. Moves up, developing 5 waves, 1, 2, 3, 4, 5, and moves down, developing 3 waves. ABC can be a zigzag, a flat, and sometimes a triangle. So here, when I do this exercise, my scenario is that this is a 1, this is a 2, somewhere here, then we have 3, 4, 5, all right? So something like this. And the question I'm having is the wave 2 complete or not? So to answer this question, you have different techniques. The first technique is using trend lines. When I connect the 2 recent highs that I have in my second wave, that is here, the ABC, I actually find the breakout that I showed you guys already. That is a typical breakout. Here, you break it out, you retest. So if you guys want to go long on this stock, this is the level you need to buy. And here you can see that you have a double signal because you had the retest of the breakout, and the support level was also given you guys by the 200 period moving average on the 4 hours time frame. So you could buy here at 9, and you had actually several opportunities to buy this level. All right. So this is how you can use, for example, trend lines to enter your trades. Here, the only question I'm having is this ABC complete or not? All right. It can be like this. It can also be like this. But for now, what I'm seeing is that here we broke out. We are trading, we're having some bullish development here with higher highs. So I believe the second wave is done, and it is here. And so right now, I think that we are entering this third wave, all right, that is supposed to do something like this. The third wave are usually very impulsive, very long. So this is the only thing that I'm missing here. I'm missing some volumes, guys, because usually during third waves, you can see an increase in volume. And here, if I go on the daily time frame to check the volume, I can see that the volumes are slowly picking up. All right, slowly. This day was good. It was a bullish day, but the next day is not amazing. If I go on the weekly, you can see that we had less shares trading this week than the week before. This is for now not what we're looking for, because we want to see volumes going higher. If we are in a third wave, this would come. So if it's not coming, for now, we don't have the confirmation. We are in the third wave. So maybe we are still in this second wave. I'm just trying to show you guys here how I do my reasoning to try to guess if yes or not the second wave is complete. I think it is, but I don't have all the signals for now in green. Here we are in the third wave. Then here we are doing same thing, guys. Okay. So we're looking for something like this for the coming week. So once again, this is only the first wave of the third. So this is not supposed to be the strongest one. We're looking for a small correction. And then we should have, you know, a very bullish day. So coming around the 27th, 28th of April. All right. So if this is correct, we should see volumes picking up and price action doing higher highs, like big moves up. And something else that you guys can use to actually see if the price action is bullish or not is what we call divergence. All right, so let me show you quickly what is a divergence. So you have a few types of divergences. You have the regular divergence. Let's take the bullish case. So here is your price action and here is your momentum indicator. When the price action is going lower and the momentum indicator is going higher, for example, I use the MACD, you can use RSI or stochastic as well, it's working well. This means that basically the price action is going lower, but you already have some shift in the momentum because the MACD, which is a momentum indicator, which is showing you who is in control, is going higher. It means that this low is less intense than the previous one. And this is meaning that the market is out of steam and that usually a reversal is about to come. Then you have the hidden divergence. So let's focus on the bullish one as well, is when the market is making higher lows, but with a momentum indicator that is making lower lows, which means that the bearish momentum is growing. And despite the growing bearish momentum, the price action holds above the first low and manages to make a new higher low. So this is actually giving you a signal that bears are no more that much in control and that bulls start to gain confidence. And usually this is a signal that the market is going to shift higher. Okay, so keep this in mind. We go back to the charts. And here I showed you guys this already, but I think it's very important that everybody sees it. So I'm going to say it again. You know, it's never bad to see the same things twice. So here, guys, we focus on the MACD and the chart. So I'm going to start on the daily time frame. I connect this low and this low, and you can see that we're making higher lows. Then we're going to check what is the MACD doing during this period. And you can see that the MACD is going from here, it's 19th of Feb. So it's here to here. All right. So we go from 0.15 to minus 0.2. So we are actually going lower when the price action is going higher. So we have a hidden divergence on the long term. So this is telling me that on the long run, we are bullish. So there is no guarantee, of course, but this is just one more indication that is going to the same conclusion that we are probably done with the second wave and that we are in the third wave development. Of course, if suddenly we see the price action dropping much lower and making lower low, which is very unexpected, then the hidden divergence would not be here anymore. So careful, those signals can disappear suddenly. I mean, you know, for now we're having it, but for example, if we don't have it anymore, this could be a signal that the momentum is shifting as well. So keep an eye on this. And on the shorter term, if I go on the 4 hours time frame, what do I have, guys? What do I have? Try to see it as well. So don't focus too much on my drawings, focus on the chart. And we are looking for momentum shifts. So the momentum here is bearish. So we're going to connect the lows. All right. So we're making lower lows. But what is the MACD doing, guys? The MACD is making higher lows. All right. This is a regular divergence. This means that actually the momentum is shifting here because the price action is going lower, but with less momentum. You can see that basically this move was much stronger than this move. So this is kind of, you know, you can even see divergences without the MACD. Once you are used to what it means, which is basically meaning that the market is just losing steam, you can even spot it, with your own eyes. And this is the reason why I like to use trend lines, because they're giving you those signals as well. Here, for example, when the market is going higher and is actually breaking out here, I know that, after a strong move down here, this is going to give me usually regular divergence. So we're having here two types of divergences on two different time frames, which is bullish, guys, which is bullish on the 4 hours, bullish on the daily. We have the trend line breakout. We have the Elliott wave counting. That is clean. Once again, guys, why is it clean? Because you can see that in every ABC, I can always do some more ABCs, So this is actually what we call XYZ correction, WXY, sorry, correction. So this is actually telling me that my counting makes sense. So once again, I'm not 100% sure, but just every technique I use for now is leading me to the same conclusion, that this counting is correct and that we are developing in this third wave. And one last thing, you can use the MACD just by itself, because actually, guys, the MACD, is it green? Not yet. Because the MACD is something that is used by a lot of institutional clients, a lot of asset managers, big money investors, and they basically just, wait for the MACD to turn green to enter the trade. So they're going to build their trade idea based on fundamentals. They're going to use technicals to enter the trades. They just pay some firms very expensively, by the way, that just, give them basic information. I work in a bank, and even my bank, they sometimes hire those guys that do technical analysis. I go to the meetings and I can tell you that I'm not the one asking questions. I can see that those guys are just repeating very basic stuff they're finding. They don't know how to use it, and still they're getting a lot of money from the banks to help them to invest. So just one way to see that technical analysis, even used in its most basic ways, is efficient. Otherwise, banks would not be paying those guys that to me are newbies. Anyway, here it's going to come, guys. It's going to come on Monday. So Monday, I'm pretty sure, like around 95%, that the MACD is going to turn green. And when it's going to turn green, usually there is a lot of buying money coming into the game, and that is going to help us to do this third wave. So everything looks very good to me. Now, let's go quickly on the news. If you want to understand why AMC went up, this week, you just check some articles, and most of the things I find is stuff like this. Shares of AMC were rising 7.8% in morning trading Thursday on no news specific to the theater operator, though there were progress being made on the coronavirus front. All right. The truth is, guys, when the market is bullish, there is no news. So, those analysts, they try to find something to understand why the market is going up, but there is no reason. The market wants to go up. It's the momentum that is shifting. It's bulls getting confidence. Every news would be interpreted better, whatever it is. But still, it's interesting to see that there is no news, and that is just about the COVID. So let's have a look at the COVID, guys. This is, I like to use this website, Worldometers. And you can see, all the information about the COVID. So what I like to check, so this is for the United States, the daily new cases. This is a good information. So there is more and more vaccine. And you can see that here we have this 1, 2, 3, 4, 5. So I know, Elliott wave can be applied to anything. So I'm not saying that this would work here, but we're having this first wave that is definitely complete. And now we're having a kind of ABC, so it looks good to me. It looks like, it really wants to go down. I mean, just looking at this here, same thing, 1, 2, 3, 4, 5. And then here we are definitely correcting, slightly going higher. It's important to see what is going to happen here in the active cases. For now, there are still 6.8 million, but I'm expecting them to drop because we have the vaccine coming. Just looking at those curves, I know, guys, I'm not a scientist. I have no clue if yes or not they're going to be more variants or whatever. I'm just looking at those curves, and they look like it's decreasing and it's going better. So it's good news. And one last thing I want to show you guys in this video, I take the open interest, guys. I find it on Yahoo Finance. I record everything here. I basically like to compute the synthetic short interest that is used on the call options. When retail investors are buying call options, they're actually getting a long position in front of market makers or hedge funds that are left short. So this is a short position that you don't see in the reports of FINRA. And this is additional short interest. And I like to check what is happening here. So what I do, I take all the maturities, you can see all the maturities until July. I check all the open interest. I compute the delta. The delta is the exposure of each option. I use this formula, guys. If you have questions, just ask me. You know, it's just formula like this. You see, there's this kind of formula. So I use it myself. You know, I rebuilt my exposure. And I can tell you guys that for now, we're having 5% of synthetic short, and the total open interest converted in shares equivalent is 12%. So it's a lot, but for example, it's not as much as GameStop, where we have 21% if market is going really higher. And you can see that those call options are mostly at the 10 strike level, and you also have some at the 40 strike level. If AMC goes higher, let's say to 15, because 15 is very reasonable, the short interest goes to 8%. So this is what we call the gamma, and this is going to push market makers to buy more shares if AMC goes higher. And I have all the reason to think AMC would go higher. And so those guys, they're going to add some bullish momentum. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I see you guys.